Right, learners, so let's carry on now with task 4 using this expanded accounting equation like we've just looked at in the previous video. The first thing they do say to you is the opening balances from the previous months of net worth have to be brought in. So if you look on your actual spreadsheet, and I'm assuming, learners, that you actually have copied this off the web if you haven't actually got the training material in front of you. And the first thing is these figures are what came out of question 3. I'm not making up anything. If you look back at your actual task of 3, that was what the assets that we already had. Remember, we moved now the expenses and the drawings over. We had accounts payable, we had income, and we had capital. And very importantly, if you take your calculator, these left-hand side, here's the equal sign, equals the right-hand side. So now we're going to do another exercise like we did with task 3, but this time we are splitting up the worth columns. So we've got separate capital and drawings, and we've got separate income and expenses. Now the reason for this is we're wanting to find out what our total expenses are, our total income, and so on. Right, so we're looking for a total of these income and expenses, so we'll be plussing in the majority of the cases. So if we have a look here now at the first entry, it says we earned an income of 7,000. But this was placed on account. So in other words, we did not receive the money. Now, when people owe you money, this is referred to as accounts receivable. The word receivable means you will receive it. So we now have to bring into our spreadsheet. And the first thing I'm going to have to do is say, right, plus I've earned another income. My total income has gone up. But I also need to keep a record of the fact that certain people owe me money. And that becomes my accounts receivable. Now, accounts receivable are also an asset to you. It's not that you own the people, but that is your cash. And you might not have it, but it still belongs to you. So it is an asset to you. Now remember, as we're going through this, you're concentrating on the plus and minuses. But you're also concentrating on the fact that there should always be a double entry. There must be amounts equaling each other. Right. Number 2, we paid electricity. Now this time you are paying. So your bank is actually going to go down. So this is number 2. So you're going to minus 800. And it's very important that you put this minus sign in, or you can use a bracket. But that is electricity, which is an expense to you. And so we have to record the expense. Now, learners, just focus. I said to you, we want to know what our total expenses are. So I'm adding this on. Once I've got my total expenses, then I can work out the profit and subtract it from the income. Right, so make sure you know that you are adding it onto your expenses. And you've done a double entry. Right, number 3, you bought supplies on credit. The word on credit means on account. So supplies, as we saw in the previous task, supplies is an expense to me. Supplies are things that are used up in this hairdressing salon. So they're not an asset, they're an expense. They're going to get used up. But you've had to pay for them. But this time you didn't actually pay immediately, so you can't go back to your bank. You've bought this on account, on credit. And so you've got a debt, you've got a liability. And so we need to make an entry into our liabilities. Now learners, I want you now to just go on with this, working through these tasks, concentrating on your plus and minuses, and concentrating on that you've got a double entry. Right, learners, so let's just go through this and let's have a look and see how you managed. In number 4, you received some more income. But this time, it was banked. So your bank is going up and you've got more income. Then in number 5, you paid off the suppliers. So your money's going down, you're paying off. And your accounts payable, which are your suppliers, your liability is going up. You owed them money and you're now decreasing it. Now number 6, you borrowed money. You took a loan out. Now, in a loan, the bank actually physically gives you the money. So your bank is going to go up by 20,000. But that is not your money. At the end of the day, it's got to be paid back. It's a liability. So you need to keep a record of the fact that you've got a loan, which is a type of liability, and that you owe 20,000. The interest rate there of 15% is not applicable at this stage. They're telling you the rate at which you are borrowing the money. Right, so number 7, the owner withdrew some money for his own use. So we did this before as well. His bank is going down because he's taking the money out. But remember, the business entity rule says you must keep the owner and the business affairs separate. And so we're going to keep a record that this owner is taken drawings. Later on in accountancy, you can have more than one owner. And it becomes very important to keep track of what each owner is taking out. So his drawings, the amount he's taken out of the business, has actually increased. Number 8, now you had some hairdressing equipment stolen. So you don't have the hairdressing equipment any longer, so it's going to be a minus. And because it's not insured, you're not going to get any money back for it. So it becomes a total loss. You've lost this equipment, there's nothing to replace it, so it's an expense to you, it's a loss. Right, then we received 900 Rand from the people that owed us money, so our bank is going up. But our accounts receivable, remember they owed us, their account is now going down because they're paying off their account. Then we paid 400 Rand off the loan, it's not said very clearly there, plus 1 month's interest on the loan. So we're paying off the loan. So first of all, our loan is decreasing. You'd borrowed 20, you're now paying back 400. And you're paying 1 month's interest. Now remember, if you go back over here, it did say to us that the interest rate was 15% per annum. That's important. Per annum meaning a year. But you're not paying a year's interest, you're only paying 1 month. So we have to do a calculation. We borrow 20,000 at 15%, which is 3,000 Rand. But that's for a year per annum. So we've got to divide it by 12. And that gives you an amount of 250. So your interest, your expense is 250. That's the cost of borrowing. And you are therefore paying out an amount of 650 Rand. And then lastly, there were 2 other expenses you had to pay, your rent and your wages. Both days your money's going down, but your total of your expenses is going up. So in all cases here, your expenses increased. The total expenses increased. So we know that at the end, we've had a total increase, total expenses of 8,500. Against that, we were going to be able to look and say, well, we earned income of 13,280. And so we now can work out the profit a lot easier than in previous, because your profit is your income minus your expenses, and in this month they actually have made an expense and made a profit, sorry. Now, we then have to obviously total all these columns, and very importantly, you've got to be in balance. So all of these add up to 101,030, and this side adds up to 101,030. So despite the fact that I've rearranged and brought expenses and drawings as separate columns and on this side of the equal sign, and left the income and capital that side, those 4, remembering, making up the owner's equity, the equation is still in balance. And this is absolutely vital that you understand this for when we go on now to look at the general ledger. So before we get there, please use some more tasks in your textbook or from your teacher in order to practice and become totally familiar with this expanded equation. Expanded because we separated all. Right, good luck, learners.